Welcome back to another episode of Beyond the Sold Sign Real Estate Unplugged. We are your favorite hosts and realtors, Lauren
and Naya.
And we are so happy you're back for another episode. If this is your first, welcome. Really quick before we get started in this week's message, y'all, Naya got engaged. Oh my God. And he did so good. I'm so happy for you guys. It was amazing. But so we're going to be celebrating her all year 2026. So we want to go ahead and get into this week's message.
Perfect. So this week's message is about why did my mortgage payment go up? The listener says, we bought our home last year and our mortgage payment just went up, but our interest rate didn't change. The letter says something about an escrow shortage and we're honestly confused and frustrated. Why does this happen every year and does it ever stop?
Yeah. This
is real.
Yeah, very real. And a lot of buyers do have that question. I feel like after they get into the house, like they're not realizing it during the process. So you are definitely in the same boat as a lot of other people. You're not crazy. It does go up. So let's start with your mortgage payment. Yeah. Just keep it easy. So your mortgage payment happens in two different parts. The first part is the loan itself. So that's going to be your principal and your interest. So let's say your mortgage payment in total is, let's say $2,000. If that's the case, you have the first part, your mortgage, your principal and interest, that's $1,000. Mm-hmm. Then you have the second part, which is your escrow. Let's just say that's another $1,000. So those two together would be in total $2,000 to make up your mortgage payment. Well, that escrow, what that is your mortgage servicer who you pay your loan to. Let's say it's PennyMac, right? That's who you pay your loan to, or your mortgage. That company is going to take out that money and they're going to use it to pay your property taxes and insurance, right? So let's go back really quick. The $1,000 for your principal and interest, that goes there. And then the other $1,000 to your escrow, that goes to pay your property taxes and your insurance. That makes up your total $2,000. So you may say like, okay, I already know that part. But why is it going up? I still didn't answer that question. So let's talk about why it goes up. Property taxes usually go up every year. Mm-hmm. It just happens. Homeowner insurance premiums also increase. And we do know that they are and have been increasing, especially over the last year. So what happens is your lender, go back PennyMac, your lender is like estimating how much the future costs will be. Right. And sometimes they underestimate. And when they do that, that is called an escrow shortage. So I don't want to say it's not their fault, but because they're doing it so early in the year, they're really trying to guess like, okay, this is how much it's going to be. But if you get that escrow shortage at the end of the year, it's kind of like, what? I was not expecting that. Shock. It is a shock, especially during that end of the year.
Don't even get me started.
That's the worst time for it to happen. But here's the funny thing. So for this house that we're currently in, that we currently live in, they have their thing is not calendar year. I think it's like fiscal year because we get our escrow analysis. That's what it's called. We'll get into that in a second. We receive our escrow analysis in May for us to decide for July.
Wow. Yeah, but I get mine in December, which feels like I don't want to look at this piece of paper at this time of the year.
Right.
I mean, I don't ever want to see it, to be honest. So like May, June, July, or December, I don't, but interesting.
Yeah. And then our home in Baltimore is calendar year. So December. We receive it November 1st. A letter in the mail. You can also go onto your mortgage servicer. Yeah. Like you can go log in and they automatically have something called escrow analysis. So if you don't want to wait for that paper, that letter in the mail, then you can go in and do that. But that escrow analysis, it gives us usually like November 1st and you have to decide by December 31st what you want to do. And when we say what you want to do, this is what happens. Yeah. So you receive that escrow analysis about 2 months prior to having to make a decision. You have two options. You can either pay your escrow analysis in full. Let's just say your escrow shortage is $1,000 in total. So you can go ahead and pay the $1,000 in total and you don't have to pay anything else moving forward for that year. Or you can separate it into 12 payments, like 12 equal payments. And that means your mortgage payment is going to go up, whatever those monthly payments are. So $1,000 divided by 12 is $83. So let's say it's going to be $83 added on to your monthly payment. So that's a decision you really have to think about and say, do I want my mortgage payment to increase $83, or do I have $1,000 that I can just go ahead, pay it, and I don't have to worry about it for the year? And this tends to be the worst, I'll be honest, like the first 3 years of you owning a mortgage.
Yeah.
Then it will kind of like level out a little bit better than those first 3 years. But those first 3 years are going to be a little bit of a shock. And we just don't want you, we want you to be very prepared when you're walking into it, and knowing, hey, my monthly payment may increase, or I need to save up a certain amount of money just in case I have an escrow shortage.
This is really good because I think a lot of times when buying a home, or I want to say like in the industry, people will say, well, if you rent, you know, your rent is going to go up every year. You know, the apartment complex, they're always going to raise it. And we a lot of times say, like, when you buy, like, oh, you're going to have the same payment. You're always going to know what your payment is. But there is a small gray area for this escrow because of property taxes and homeowners insurance. So I think probably as a whole in the industry, we could probably do a better job of making that part clear. Do I think that buying still probably for most people is still the better option long-term and more stable long-term as far as, you know, knowing what you're going to pay and being able to predict it and having a reward and a benefit? Yes, absolutely. Yeah. But there is a chance that your mortgage overall will go up because of the components that Lauren was talking about.
Yeah.
So,
that's a great point that we should definitely do a better job. But we don't want to scare you off.
Yeah, we don't want to scare you either.
Yeah, definitely a better job at explaining that. And that's what this episode is for. Like, it's just straight up, we want to tell you what it is, just in case no one else has told you. Or if you're right now in the process and you're like, what? I'm not expecting that. Another thing to do, which I do not do, is shop homeowner insurance rates. See, I have all my stuff like lumped in, right? Like car insurance, home insurance. And that's how they get you. I'm not even gonna lie, right? They're like, oh, lump it all in, we'll give you a discount. That discount was probably good 5 years ago, but I have not gone back to be like, let me go ahead and shop rates. Y'all, shop rates as often as you can. Yeah. Change it up. This is something I'm telling myself I will be doing this year because our rates have gone up, and I'm like, we got to find something a little better. So that's another way where you can kind of help control how much your escrow would be short if you just go ahead and do homeowner insurance rates.
Absolutely. So, and you should shop like a little bit before your whatever premium is about to renew for that next year. So like a month or so before. Yeah.
For sure. And escrow increases are annoying, but they're normal. Yeah. And, you know, your interest rate still stays the same. So that stays, that levels out. I still think it is a lot less than you waiting to buy a home years later. You know what I mean? It really, I mean, the amount we pay now for our mortgage and the amount people are paying who just moved into the homes here, when I tell y'all, it is a massive difference. Even with our escrow going up a little bit or having an escrow shortage, the difference in monthly payments from what we pay when we bought in 2020 than what people are paying now who purchased in 2025. It is wild. So just saying, you know, it's annoying, but I still think, just like Nai said, it's worth it.
Yeah.
So yeah.
Well, this was great information. I hope you all, you know, learn something and have something to look forward to so that you can be prepared when it's your turn, when it's your time to buy. Thank you for joining us for this episode. Please be sure to follow us on YouTube, on Instagram, TikTok. We are on all platforms. Any platform that you like, we are there. Be sure to like, comment, subscribe, and share, and we will see you next week.